Some of my favorite quotes from trading and investing come from Jesse Livermore, who's known to be like the godfather of day trading. And one of his favorite quotes is where he's talking about the challenge of trading and investing and the beauty of it, really. And he says, the game of speculation is the most uniformly fascinating game in the world, but it's not a game for the stupid, the mentally lazy, the man of inferior emotional balance, or the get rich quick adventurer. They will die poor. And I love this quote because it does embody the reality of trading and investing or speculating or whatever you want to call it. But what I love about the markets is that it is a high stakes game or business, however you want to look at it, with incomplete information based on an uncertain future. So basically, you're taking all the information you have today and trying to make the best decisions with a lot of money on the line as you can. I always tell my friends, if you want to find out who you really are, then trade the markets, because you can't hide from the emotions and the fear, like fear and greed and things like that. And so I was really happy to see you guys saying, over half of you guys said when the markets were panicking yesterday, I said, what are you doing today? And 56% said chilling. So about a third of you guys said buying, and a little over 10% said panicking. So I know I have kind of a biased audience. A lot of you guys are more experienced traders and investors, but I just thought it was cool to see that. And there's always a story. Something that I wanted to point out about yesterday when the markets crashed is there's always a narrative. And as humans, we have this instinctual nature to try to figure out what caused certain things in the markets. And if we take a look at the price action, you know that yesterday, this is the candle that we were staring at, where on this leg down, this was the first time that Bitcoin had pulled back 30% during this entire bull market. And there's several things that I think people are missing or just not really paying attention to. And so in this video, I wanted to talk about what I see, what I'm thinking, what I've done right, what maybe I would have done differently. But again, hindsight's always 20/20. And so as somebody that's been trading and investing for a long time, my goal is not to try to figure out and be perfect and guess what the markets are going to do, but just manage my positions in a way where I'm not going to get hurt no matter what, and where I have no regrets no matter what the markets do. Okay. So if you're new here, again, I'm Chris Dunn. I'm known as the world's first Bitcoin trading and investing educator, and I'm here to help you become a better trader and investor. And so with that said, let's jump into a couple of things that I think are important questions that I ask myself all the time and might be helpful for you. Anytime I'm looking at the markets and I'm trying to figure out, like, what's the story? What's happening? These are just a small list of some of the things that I ask a lot. Number one is, like, what emotions are driving price? Not just what is the story, right? So yesterday, I'm sure by now you guys have seen it. It was the unwinding of the Japanese yen trade, and also, recession fears and unemployment ticking up, right? These are all the headlines. And if you looked at the front page of the Wall Street Journal or CoinDesk or Bloomberg or CNBC, it was all just really scary headlines, right? And so that was the emotion driving price, was fear and people scrambling to figure out what was happening. And then what does the group think that everybody is agreeing with, right? What is the popular narrative, and how could this market cause the most people pain? Like, what is happening that could cause everybody pain? Also, what will happen when either this panic or this euphoria subsides? Either it exhausts itself, or it capitulates, or everybody starts really just capitulating in the other direction. And then what is causing me personally to feel uncomfortable, right? The cool thing about trading and investing is, like, you get to really viscerally feel fear, greed, panic, euphoria, like all the things, until you've experienced them for the first time. And until you put real money on the line, you don't know how you're going to respond in the live market, right? And the more experience you have, the more experience you're going to have with addressing those emotions. But even having done this for a long time, I still feel things, right? I'm not a robot. So sometimes I feel uncertainty or scared or euphoric. And instead of trying to push those down, like some people say, well, if you're trading, you need to try to repress all your emotions. It's like, no, you want to look at them and say, what am I feeling and why? And is it correct? Or do I need to do what's actually uncomfortable, which a lot of times is the profitable thing. And the other thing that I like to ask myself is, what am I missing and what are my biases, right? Is there anything that's blinding me that maybe I'm overly bullish or overly bearish, or am I just confused and I can't really see the forest through the trees, right? So that's what I've been looking at the past few days as the market has been pulling back, because if you watch my last video, it was actually quite bullish, right? And one thing I was looking at was the data. When you have 5 months of consolidation, the odds were very high that you get continuation. The only difference this time is we haven't had this long of consolidation at all-time highs. And so one thing that I was looking at over the prior market cycles is looking at what happens as trends and bull markets mature, meaning the longer that they go on for, you typically see larger pullbacks. And one thing that we can use as an example here is going back to 2016. I know a lot of you guys weren't here then, but we actually had a lot of consolidation, right? We had almost 2 periods of 6 months of consolidation during this bull market as it was ramping up. It was over 200 days each time. And what happened was there was a lot of fear and uncertainty, and there was stories that were happening here that caused a lot of panic. Like back here, Bitfinex got hacked, and there was some really large losses, at least for at that time. Now it's kind of peanuts, but one thing that I was thinking about was how back during these market cycles, we had many, like half a dozen pullbacks of over 30%, and that was commonplace. And what's happened so far this market cycle is we've had about a half dozen pullbacks of only 20%, right? So that actually started back in January of 2023 when we shifted from bear market structure to bull market structure. And we had our first pullback that was about 20%, which is where I first started buying. And then we had several other pullbacks that really didn't exceed 20% by much. And here's what happens though. As a trend matures, you start to get runs, retracements, and extensions, which we've talked a lot about. You can measure with Fibonacci tools. But once you have a trend that establishes itself and you have completed extensions, right? So let's talk about what that means. So you can look at, from an anchor low to the pivot high, you can look at the retracement levels. And then the second step is you pull up a fib extension to find profit targets into the future, right? And once you have, a mature trend where you've had several runs, retracements, and extension, you can begin to look at the larger trend as a single run. And then what that does though is that increases the size of the overall trend. And so you can get deeper pullbacks. So instead of like these small, like little 20% moves that we've been seeing, as that trend matures, you can get a much larger pullback. So you can see like this, run, retracement, extension, which at the time, these moves may have looked big, but this becomes part of a much larger run, and then you can get a deeper pullback. And that's what I think is happening now that I just don't see a lot of people talking about, and I think people are kind of missing. So if we just start with a fresh screen here, I'll show you what I'm talking about. So these are all those small run, retracement, extensions, right? So bull market started, first pullback, extension, run, retracement, holding higher highs, higher lows, right? And the trend just continues to get overextended. And we had really an unprecedented move where we had the 7 green months in a row. And so this now becomes part of a much larger trend, right? You could look at this as one leg to the upside. And then when you pull a retracement of that fib retracement, you can see we have now bounced off that 38%. And then if you go down to a weekly chart, you can see even a little more color where we're now bouncing off of the 50 period moving average. And so that, again, is what I think is happening. Again, a lot of people, they zoom in on the daily chart or even shorter time frame period or shorter periods and shorter time frames, and they get overly tick locked on different areas. And the 60K zone is and was and still is an important price level. But I think what we saw over the past really 3 or 4 days, like Friday and then through the weekend, and then when the Japanese Nikkei opened and had basically a Black Monday type panic event, that caused a perfect storm of market sentiment and just fear-based narratives that caused stocks and Bitcoin to all pull back together. And one thing I was talking about earlier in the year is the correlation that Bitcoin had with the NASDAQ. And then through June and part of July, we had an inverse relationship there. But check this out. This is what happens when the market goes back into panic mode, is you get direct correlation. And this is a chart that not a lot of people focus on, but I think is pretty important because it shows gaps and it's easier to kind of line up with the NQ or the NASDAQ is the Bitcoin CME futures, because this has time periods where it doesn't trade, where like spot Bitcoin trades 24/7. But you can see what happened here is over the weekend, as the Japan markets started to panic, spot price started to close this gap. So we had this gap from mid-July. So that is now closed. But one thing that I sent a watch list to our Skill Incubator community was the fact that that was actually, because we were panicking over the weekend, that was going to create another large gap down. So that creates a magnet back to the upside. So we're now going on 6 months of just choppiness and consolidation, but the volatility now is actually increasing. And so one thing that I thought was really interesting yesterday is if we go from the daily down to an hourly chart, you'll notice that when the CME futures markets opened, the Bitcoin CME futures and the NASDAQ were extremely correlated, like almost perfectly correlated. If you look at the opens and then the sell-offs and the panic overnight, and then what happened is right on market open, US time, so 9:30 a.m. Eastern time, the stock market and crypto markets immediately caught a bid. So think about that. Over the weekend and overnight with Japan, the market's panicked off. Stock market opens. Everybody thinks, oh my God, CNBC is freaking out. You've got the markets in turmoil on the news. You've got all these scary headlines. Buying. That's all that happened, was buying. That was the low, was market open, right? So think about that. Going back to the questions that we just talked about, what are people missing? What is the group think? What emotions are driving price? The more you start to ask these questions, the more clear the picture becomes, right? And again, this isn't about predicting what the markets are going to do perfectly. In fact, I added into resistance thinking there was a great chance of a breakout, and then the markets pulled back. And by the way, if you are a breakout buyer, that's going to eventually happen. If you're trading a trend and you're buying breakouts, it may work 5, 6, 7, 8, 9, 10 times, but eventually a breakout is going to fail and you're going to get trapped. So that's just part of trading. And if you can't emotionally handle that, like our friend Jesse Livermore says, then trading might not be for you. That's why the mental side of this is so important to, one, be able to look at yourself objectively and say, what am I thinking and doing? And how am I responding? And what are my blind spots? What are my biases? And then also, what else do I see out there? What are most people in agreement about that maybe is an overreaction or groupthink, right? I even thought laser eyes back in the last market cycle was similar euphoric behavior that I believe caused a crowded trade to where the market topped out before 100K last time. Okay, so let's talk again about what I think is going to happen or what is happening. And again, this isn't financial advice. I don't want you to trade on anything that I'm saying. I'm just showing you what I'm doing and what my opinions are. And you might think I have a blind spot, and that's okay. It's the beautiful thing about the markets is when you have an opinion, somewhere around half of people are probably going to disagree with you, and that's cool too. So again, the bull case, which I think is still in play and that pretty much everybody knows about, is the market cycle narrative, right? The only question is this a crowded trade that's going to trap, or is it a self-fulfilling prophecy? And the way that I kind of decide that is, well, it's worked until it doesn't, right? This has not failed yet. So why am I going to try to front run it and think that it's going to fail until it does, right? Now, if there's data that we have that says, oh no, stock to flow is definitely going to fail, the 4-year market cycle is going to fail because of XYZ, but I don't see any real narrative out there that is credible, that has a lot of weight that I'm going to give to that. So right now, this is where we are on the blue dots, and you can see the prior market cycles after the halvings, which are the white lines. That is typically around 1/3 of the way into the bull market. Okay. So is that the case? We'll see. But one thing that I think is happening is that this is the first, call it larger pullback in the overall macro trend, right? Through here. And again, this is the weekly chart. So we're getting a little more detail, but it's still the bigger picture. We had all these small little pullbacks, and then this run got extremely overextended in a short period of time. And then we've basically been stair-stepping down the Fibonacci retracement levels. And every time there's a panic or a washout, there's always a narrative, right? There's always a story. And what you see the journalists do is insert market, so Bitcoin or S&P or NASDAQ or Dow, falls X% because of X reason, right? And what they're doing is they're trying to get clicks or views. And they're always oversimplifying the reason, but they're trying to make people feel better, like there is a single reason, which there never is. It's a culmination of reasons. And so what I think happened over the past week is you saw the fear-based narrative starting to pick up with, okay, inflation's picking up. Okay, we've got this weird trade in Japan that might start to unravel. And what does that mean for the markets? And there's a plethora of other reasons. I'm not going to go through the entire list of everything the media has been talking about. But I think it's important to just understand, even if you don't agree with everything the media is saying. And so one thing I also want to point out is a tweet that I put out yesterday where I just kind of went through the steps of what was happening. Okay, so we already talked about the fact that Bitcoin and NASDAQ were correlated extremely closely. And the fact that bulls stepped in right off of market open, and the 200 period moving average on the NQ and the Bitcoin CME futures was holding, and price actually closed back up above that. Let's pull that up on the daily. So you can see we closed right around the 200, and then today closing right back above that. It's still kind of midday, so anything could happen. But what this feels like to me on a market sentiment level is a lot like the March 2020 COVID panic vibes. So for you guys that were around, this was basically the best buying opportunity over the past couple of years. And we had a great time in our Discord channel buying the hell out of this dip into the 4Ks. So it felt kind of similar, right? The only difference is at this point, price was actually like 80% off of all-time highs. So if we look at the spot market, you can see back here, this panic was well off of the 2017 highs, right? So we were like literally 80% off of that, where this is a little different. This is like the first time that this has actually happened, where we've had this much consolidation at the top, and from the prior pivot all-time high, it's about 33%. So again, it's only a third off of the all-time highs after a year and a half of bullishness where we haven't had any pullback of over 30%. Okay. So that's the bull case, is that stock to flow model / idea is still intact. And this is a pullback, a larger pullback of the overall macro trend. The bear case is that the markets are actually rolling over. We're actually going into a recession, and we're going to see a year plus of bear market in the stock market. Okay. Now, what significance does that have with Bitcoin? Well, Bitcoin's actually never been alive during a recession, like a true extended recession. You can call the little 2020 COVID thing as a recession that was manipulated by a ton of money printing, which kind of highlighted the value and the importance of Bitcoin. But if you remember, Bitcoin was actually born in the ashes of the 2008 financial crisis. So it got to experience that decade plus of bull market and the stock market. So what happens if the stock market does go into a multi-year bear market, or the economy goes into a true recession and the Fed starts cutting and we get back down to 0%, right? That is yet to be seen. So we'll have to keep our eye open for that. But until I see data that that's actually playing out, I'm remaining bullish, cautiously so. I got chopped up a little bit in this consolidation. I paid for a partial short position and then I added at resistance. But today I actually bought on the panic dip as well. So I'm still long. We'll see what happens. I could be wrong. I recognize that I have a bullish long-term bias to Bitcoin, but I'm also a shorter term trader. And so I'm looking for signs that that thesis is not playing out. So what do you guys think? Is this bull market over? Is this time different? Is the stock market or Japan or the macro picture going to pull Bitcoin into a cycle unlike something we've seen before? Or is it business as usual? Leave me a comment. Let me know down below. And if you like this video, please like it up, share it with somebody that you think would get value from it. And I'll see you next time. Thanks, guys.